What's up, everyone? I'm making a short video on where I think we are in the economy right now. It's June 2019. Um, anyways, prior to last week, we had a nice bull run in share markets in Germany, uh, especially in the U.S. and especially in China and Hong Kong, Taiwan, and some of the other emerging markets, even Mexico. Um, where we are, I think we're on the beginnings of a recession. I think now is a good time to start, excuse me, shorting the market. For my part, I'm going to be shorting the DAX, the S&P 500, the Russell 2000, China, if I can get filled. So far, I haven't got filled in anything. I'm getting close to getting filled on S&P 500 short, but I think earnings are going to continue to go down. I think uh, with a kind of a trade war maybe happening. I don't think it's going to happen, but we'll see. Um, with the threat of a trade war, the markets are going to continue going down. We've seen oil go from, I don't know where it was, $65 a barrel to, talking about WTI, 65. I don't know if it went up to 68 or not. Just before it plunged, I just got filled. It kind of pisses me off, and then it reversed. Now we're in a downtrend for oil. Now I think we're at 55 or $52 a barrel. But if we get back up to 60, I'm going to start shorting there, assuming I'm still bearish, which I assume is going to be the case. Um, but we're seeing a slowing economy all over the world, but in Europe especially, in Latin America especially, and in China and some of the other Asian markets. When I say, I'm just talking about the economy, they're really, really slowing, especially in Europe. Europe is really not doing very well. What I expect is going to happen in the next Fed meeting is Powell will either signal they're going to lower rates or they will actually lower rates. It will depend on how much markets fall. If markets continue to fall, I'm almost positive they're going to lower rates, and I'm almost positive they're going to signal that very soon. But I don't think that'll happen until like September, September, in that time frame. So until then, I would take a bearish stance. I'm still actually bullish on gold. I still think the trend in gold is up. I still think though when it gets kind of overbought, you need to short it. When it gets kind of underpriced or oversold, you need to go long, but have a core long position. I say that because I do believe the Federal Reserve is ultimately going to lower rates. So I don't know what the EC is going to do because they're already at negative rates. But Japan, China, and the U.S. and Europe, the big economies, they're gonna either print money or they're gonna lower rates if they have positive rates, or they're gonna offer some kind of incentive. Sorry about the camera keeps focusing. They're gonna do anything they can encourage the economy to grow, especially in China. They really need to keep people employed there and keep the economy going, which I wish them luck. I don't know how long their command and control economy can keep plugging away, but we will see shortly. Same thing in Europe. There's a lot of economic problems in the Eurozone, and it looks like to me the UK is going to have a hard Brexit move. I'm not sure how that's going to work out, but it looks like Theresa May is on the way out. They're going to have a new prime minister. And the country there is about evenly divided. Half of the country wants, or half the UK wants to stay in the EU, and the other half want to leave. So I just do not see how that's going to work out. I'm pretty bearish on the pound right now. That could change, but I think until we get all this worked out, you're going to see a strong dollar and you're going to see lower markets. You're going to see capital from all over the world flood into the dollar. And despite the strengthening dollar, it would not surprise me to see gold continue going up. It'll have bounces up and down, of course, but trend-wise, it will be going up, not down. And I believe, especially when the Federal Reserve announces lower rates, or they start hinting at it, I don't know if you see gold spike right away, but you'll start to see the markets come back and you'll start to see gold come back. If and when that happens, I expect I'll be, oh man, my camera just will not work with me tonight. Anyways, I expect tech to really do well. Until then, you want to short tech. You want to short the Russell 2000. I'm talking small companies, and earnings from tech companies are going to go down. I just can't get this thing to focus. Anyway, sorry about the focus. I'm not sure what's going on there, but that's what I think for June. We're at June 4. 2019. So I expect markets to continue going down. For my part, if I get filled, I'm going to be shorting the S&P 500, the Nasdaq, the 100 there. Then I'm going to be shorting China, Japan, and then of course Germany. I would also be looking at shorting France and Italy, especially Italy and France. They really have problems. I don't see how they can work those out without more money printing. And I think the Eurozone is eventually going to split up. That's why in the long run I'm not super bullish on the euro. Eventually they'll get all worked out in the euro bottom. I don't know when that will be. Maybe when it gets to be par to the dollar. But right now it looks to me they're going to have to continue printing money and continually dealing with the fact that half the population wants to kind of end the eurozone project. There's recently elections there where a lot of the central right parties have gained power. I don't know how that's going to work out immigration wise, but there's a lot of fear of immigrants coming in. There's a lot of economic fear of losing their jobs. And the way technology is coming, there's going to be a lot of unemployment no matter what happens. And I don't see how the Eurozone can survive all that with the euro. Eventually, one of those countries, Italy or France, maybe Germany, will divorce the EU, or the EU will kick one of them countries out. I don't know. I really don't know. But it'll all be solved with more money printing, which will probably benefit gold. Pretty sure it'll benefit gold. Ultimately, right now, it'll benefit the US dollar. So the dollar will be king for a while. Not forever, just for a while. So I would have a kind of a bias towards the dollar. And even though I believe we will see a strong dollar, I still think gold will still go up. Now, for short periods of time when there's dollar strength and bursts in that dollar strength, I expect gold to go down, especially if interest rates, not government, but market interest rates are going up, then I expect that, but I don't expect that to last much longer. As interest rates on bonds start to come down, I expect to see gold take off, especially when the Federal Reserve either hints at or actually lowers rates. And if they panic, they've been raising rates by 1/4 of a point. If they panic and start lowering rates by 0.5%, you'll know how there's a lot of fear there. I think we're in a time where the Federal Reserve just doesn't really know what to do. The EU doesn't really know what to do. We're in these unprecedented times, so have a core position in gold and be willing to short the market and be flexible. I'm going to be flexible and be willing to go along when they start flooding the markets with cash again. It will probably go through the stock market and bond markets. It'll go through the bond markets first, then the share markets. But as of right now, June 4th, I'm pretty negative as far as the share markets. If you can get filled at higher levels, start shorting at higher levels from here. And then be flexible enough when you start seeing a lot of fear and panic in the markets and all the world banks coordinate some kind of reflation policy, especially from the U.S., the Bundesbank, and China. Expect the markets to bottom out and just start shooting back up. Oh yeah, one more thing. I mentioned shorting France, shorting in general. If you're shorting an index, remember you have the carrying cost plus in some indices, plus you have to pay the dividends. So keep that in mind as far as your long-term trades go. Anyways, that's just my feeling on what's happening in the markets, and I believe all this is based on a slower economy. I base this on technology where there's just not as much need for traditional type workers anymore. From office workers to factory workers, everything's being automated. Everything's being automated through software programs and robots. So until we get all this worked out, I think there's going to be a lot of pessimism, and it's going to be reflected in share markets, and that's going to be reflected in at least the Federal Reserve lowering rates. I'm not sure what the Eurozone's going to do because the rates are already negative there, but they'll figure out some way to keep printing money. And then there's a potential trade war. Again, I don't think it's going to amount to much other people do. That's just my opinion. But I think there will be trade agreements with all the countries Trump has issues with. If not, maybe we'll get a little disinflation or deflation. But that's why I'm a little bit pessimistic right now, and I'm shorting, and I'm willing to short the markets. But I think these things will be worked out eventually through lower interest rates, more inflationary policy, and things like that. So ultimately, you got to be flexible and be willing to short and go long, depending on what the markets are doing and things of that nature. Anyways, just a short little video on where I think the markets are going to go. And I think that we're going to see a slowing world economy, and we're going to see a lot of panic and fear in the future, which is going to cause hell. And elections already has in the Eurozone, it has in the U.S., it probably will in Canada and other countries too, even in places like India, Sri Lanka. Oh man, there's going to be a hardening of people's views on a lot of things. So be prepared for volatility, have a core positioning goal, and be flexible and be willing to short the market when you need to. And when confidence comes back and the world reserve banks panic and just flood the market with capital, be willing to either be neutral or at least get long in these situations. Anyways, this is my final thoughts for right now, June 2019. Like, share, subscribe, and leave a comment, please. Thanks.